Hello and welcome to the Wealthy Trades Market Forecast for April 9th, 2015. This is Tyson Clayton. Let's get right into it. We'll go into what happened yesterday. We're going to dive into what we're looking for today. But before we do that, I want to show you some interesting stats with the levels to win data, okay? And I think it's imperative for every single person to understand what this levels to win data is showing. This is kind of the secret sauce behind everything we do at Wealthy Trades. Why did we have a phenomenal day on Monday, up 2.85%, and on Tuesday, up 2.8%? Well, the reason why is because we have a tendency to find the best places to allocate money at the best times, and it all starts with the levels to win data. Okay, so I want to show you this, and the reason why is because we have some interesting things that could potentially take place today. We are all based on everything we do at wealthytrades.com is based on historical probabilities, historical movements, and within the levels to win data, I can glean a lot of information on the SPY, for example. Right, so the SPY is the S&P 500 ETF. What I can see is that it has a very high hit rate. Yes, it's in a downtrend. Okay, so it's moving down. That means it's closing below major pivots. It's also indicated with green bars and purple bars. Purple bars indicate a downtrend. It's sitting at an actually very interesting level. Actually, it's sitting at a level that could potentially technically break out on maybe a swing trading basis. And the reason I say that is, again, as you get used to the market flows, you can kind of see these patterns playing out. But we shift into a downtrend. We then go back, and this is what I call that trend shift, right? So here's that shift bar, that purple bar. We then go back and test that area where we shifted, and then sell off again. Well, this is the second test. And on the second test, not only did we not break below that prior kind of swing low here, we didn't break below that, but we're testing that for the second time. So what we could see is we could see kind of a slingshot higher, and this could kind of be a kind of a 1, 2, 3 type of pattern. You got one leg, two leg, and then the three leg kind of pushes higher here when we start to break that. But anyway, something interesting to look at. And the reason why I think we're going to get kind of a confirmation today, either we're going to start to break down, all right, and this downtrend is going to confirm, and the downtrend will confirm, all right, just so you know, on a break of this bar's low, because that's kind of the last kind of pivot low we put in, and that pivot low is 205.21. If we break 205.21 today, and I think we have a chance to do it today, then this downtrend is going to continue, and I think we're going to probably put in another leg that looks like this, probably another 6-point leg down, so probably pushed back down to that 200 area. Whereas if we break above this pivot, this 208.76, then I believe we're probably going to put in a rally that looks something like this and probably rally up another 6 points, and that's probably going to push us to all-time highs. I think that's all going to happen today. I'm not saying we're going to all-time highs today, but what I'm saying is I think we have an opportunity to kind of either break above this pivot high, this 208.76, or this low of 205.28. The low will obviously be harder for us to break because it's further away. But I think we could see some volatility, and the reason why is based on the levels to win data. Now, think about this. The market's in a downtrend. So, what we do is we take the historical rates when the SPY is in a downtrend, all right, and it should hit 206.72 on the downside. That's its trend side. And it should hit 208.86 on the upside. Well, it hits the trend side more often. It hits that level 51.9% of the time, so it has a high probability of hitting that, but it also has a high probability, 42.3, of hitting the counter trend side. So as you can see, there's like a 93, 94% probability of it hitting one of these sides. And that, anytime you get a real high probability on both sides, it shows you that there's very likely big ranges, high volatility happening today. On top of that, think about this. This levels to win profit is profitable. So what that means is when the SPY hits this downside, it typically continues to go in the direction of the trend, so it makes a profit. So that means when it hits the downside, it continues to fall. Well, get this. When it hits the upside, it loses money. That means when it hits the upside, it usually hits that and then rallies higher because we're in a downtrend. So therefore, because we have a profit on the trend side, and we have a losing, it loses money on the counter trend side, and we have a high hit rate. That shows that Thursdays historically set up for huge moves and big volatility days. So I am thinking that we're going to get a fairly big day today. The futures are fairly flat right now, but we have potential historically to set up for a pretty big day today. And we're going to have a pair bias. We're not going to take a straight directional trade because we do have some crazy things going on. Again, look at this. We have the SPY moving down, right? The SPY's moving down, but the market trend quality and the trend is up. Geez, what do we do? Well, we're going to have to do a pairs trade. Just like we did yesterday. All right, yesterday what we did a pairs trade. We went long in DVN and short in eBay, and our pairs trade overall was down about 0.5%. Market was up slightly, give or take. So we well outperformed. If you remember, Monday we were up 2.8%. Tuesday we were up about 2.8%. So we gave a little bit back yesterday. Still, up over 5% for the week. So nothing huge. But today we're also going to do a pairs trade. That's the nice thing about a pairs trade is that you can't get real hurt, right? And sometimes you can really have the phenomenal wins where you can make money on the long side and the short side. And that's what we're looking to do. So today we're going to do another pairs trade. And if you look here, the reason why we're going to do a pairs trade is because we're in an uptrend. All right, we've got 59.2% of the stocks overall on the S&P 500 moving up, but the quality is only 45.1. So it's under 50%. So we have to do a pairs trade. So what I'm going to do, I'm going to take the best sector, which is the XLY. It's got a quality of 55.7. It's the highest quality. So that's the reason why the discretionary sector is the best sector. So I'm going to take the best sector, I'm going to move it over in my portfolio, and then I'm going to move each stock by hitting the plus symbol, each of the 8 stocks over into my portfolio, and I'm going to find the best long opportunity for today. Okay, look at this. This is interesting in itself. The XLY, even though it's the best sector, because in the XLY, which is the consumer discretionaries, we have 56.5% of the stocks in the XLY moving in an uptrend. But the XLY itself is actually moving down. Okay, so that's a little bit of a concern there. That's also the reason why we want to do some pairs trades today. So we can automatically eliminate the XLY itself. But that just tells you, okay, you probably shouldn't just take a straight up bullish bet or bearish bet. If I had to place a trade, I would obviously place it on the bullish side because overall we do have more stocks moving up than moving down. But let's go through and eliminate what we're doing. We're using our drill down analysis. We want to see a profit on both sides, both levels to win. If we don't, we're going to get rid of it, like RCL. Just going through this. All right, so all those make money. Okay, the next thing I want to do is I want to look at, make sure that it's got a high close rate above the trend side and a low close rate below the counter trend rate. So 42.3 and 11.5, that's great. Compared to 36 and 13, CCL is better than KMX. KSS is great, 48 and 1. KSS and CSCL are better than Nike. Again, I'm just looking at the close rate above compared to the close rate below. I want to see a wide spread between those two. Okay, so these three are the best. Okay, here's the thing I want you to pay attention to though. There's one in here that actually there's 2 of these that I'm not a huge fan of. They are great historically. They do really well on a Thursday in an uptrend, but OMC is going to be my pick. All right, and this is something I haven't talked about before. I don't think I've talked about it before in these videos, but I'm going to talk about it now. The reason why OMC is my pick is because if I just blindly look at the data, it looks like KSS is best, 48.1%, profitable on both sides, closes above this level on a frequent basis, closes below this level like rarely ever. So KSS looks the best, but here's the problem. Yesterday it opened at $78.12. It closed at $77.75, so therefore it had a down day. Well, let's look at OMC. OMC has phenomenal stats, makes money, 42. It opened at 78.33 and closed at 78.91, so it had an up day, a decently up day. Well, CLL, same thing, 49.04, had a down day, 48.61. So again, this doesn't happen all that often, but within a market that's kind of bumping along and trying to find a direction, I want to do everything I can to put the odds in my favor. And the fact that OMC has phenomenal stats, makes money, closes above the trend side often, doesn't close below the counter trend side that often, and had a bullish day yesterday, that's going to be another filtering tool. So I'm going to go with OMC. Okay? And that is my long position, OMC. And now my short position is going to be in the XLV because that is the worst performing sector. Okay, it's got the highest quality in a downtrend. It's got 61.8% of the stocks in it moving in a downtrend. So I'm going to bring all the stocks in the XLV, the healthcare sector, into my portfolio. And then we're going to go into this and try to find the best shorting opportunity. Eliminate anything that doesn't make money on both sides. I'm just looking at the levels to win profit here. And if it doesn't make money on both sides, I'm eliminating it. Okay, so we got it down to 3. Okay, so now what we want to see is we want to see a high, over 50, under 50, that's good. Over 50, under 50, that's good. And over 50, under 50, that's good. We also, so now we got 3. Again, because we're in a very unique market, what I'd like to see is I'd like to see the stock that closed lower. So as you can see, BIB opened at 419, closed at 4, so it had an up day yesterday. This one had an up day, and Lilly had it. They all 3 had an up day. Okay, so with that said, what we could do, if we're not confident in that, we could go to the next sector, but we're not going to. We're going to stick because the XLV is the best sector to go short in and to pair in. I'm going to pare this down to what I see is the best opportunity, even though they did both or all 3 have an up day yesterday. I'm going to pair this into the best opportunity that I see. So I'm going to use this 34.6, 13.5. So BMY is better because it closes above this level slightly more often. Even though Lilly, it's pretty close. Lilly hits the upside more often. You know what? I'm going to go with Lilly because it wasn't up quite as much. It wasn't up quite as much as BMY yesterday. So I'm going to go with Lilly on that one. And then let's compare BIB 32.7 and 9.6. 32.7. So it's fairly close. Lilly hits the upside more often. BIB was up over 1% yesterday. It's very close because BIB was up so much yesterday. I'm going to actually go with Lilly. I'm going to actually go with LLY. And, do you really want to short in a $425 stock? Probably not. So that's another reason I'm going to go with LLY. Okay, so this is the plan. I'm going to go long OMC today. I'm going to go long right at the open. We're going to do a pairs trade. OMC meets all my requirements. I can look at it on the chart. Let's just look at this real quick. Yeah, it looks pretty good. Again, it looks like it actually looks right at kind of a breakout area, so I do like it technically. And then LLY, let's look at LLY. It obviously had a big run up and then a sell off. It's kind of trading right at that, pretty close to its shift area, so I do like that. So LLY is my short. So here's what I'm going to do. I'm going to go long OMC at the open, and I can add if it hits 79.36. I can add there. If it hits 78.32, I can add there. The reason why is because it makes a profit on both sides. And then I'm going to go short LLY at the open. If it hits 71.55, I can add there. Or if it hits 72.77, I can add there. Okay, so I can do both of those. Again, close both of them at the end of the day. Long OMC, short LLY. The reason why we're doing a pairs trade is because the quality of the market in this uptrend is not that great. For the week, if you remember, we are long KR. Okay, so let's look at KR for the week. This trade is doing decent so far. Let's go into it so I can show you. It opened the week at 76.71. It's now at 76.90, so up slightly. Again, nothing to write home about, nothing phenomenal, but again, up slightly. So we're holding that one all week long. If it does hit 78.32, I'm going to add to it, or if it hits 75.94, I'll add to it. And then on the monthly, if you remember, on the monthly we are long KAH, and KAH is doing decent. It's about break even for the month. Um, so doing okay. But again, we're gonna hold that all month. It's only the 9th, so we're gonna hold that all month, and that should look good. It looked pretty good last month also. So anyway, that's the market forecast for April 9th, 2015. Continue to listen, tell your friends, family, tell everybody we're having a phenomenal week. We continue to find the best sectors in the best stocks within the certain market environments and market direction. Everybody needs to understand this information. Thank you for your time. Email me at info@wealthytrades.com if you have any questions.